Hello, good morning. It's Thursday the 23rd. I'm FX Blue and this is the market brief. So the sterling rally took a bit of a knock yesterday, despite of course the dollar continuing to fall. We've got Brexit, China and the UK economy as the main drivers for sterling at the moment. And each of them has got a different time scale attached. China, of course, plays the long game, so they won't rush into retaliation over Huawei. Brexit and the trade negotiations, they've passed the extension deadline and it was about honours even at the turn. But it's a tricky old back nine from here until the December deadline. So do you think it'll end with them sharing a pint at the 19th? Or will one side be more likely to throw a strop, launch their clubs into the water hazard and refuse to play out the course? What do you think we're looking at? Deal or no deal? Drop me a note in the comments below, please. And then, of course, there is the UK economy. In the 3 months to June, the UK borrowed about £128 billion, which is more than was borrowed in the whole of 2019. So the market is eyeing up that debt mountain and watching keenly how Sunak will deal with the economic fallout of COVID-19. Yesterday sterling sold off a little. We sold down to 126.50 against the dollar, but we recovered on the day to around 127.40, which is where we opened this morning. And it was a similar pattern against the euro too, but the recovery only reached around 110. It's beginning to feel a little bit glib, putting the dollar decline down to rising risk appetite. Yes, the euro is on the up since the pandemic relief fund was signed off, but more traditional drivers aren't looking so good over there either. News of the next financial support package can't come fast enough for those with jobs affected by the pandemic, and there's a little fear of it being too little too late, beginning to creep into the market. Meanwhile, the weekly jobless claims remain stubbornly over that 1 million mark, which continues to suggest that a V-shaped recovery is looking unlikely. Sentiment indeed is tipping towards either a double dip recession or even just one continuous recession lasting into at least Q1 next year. That doesn't bode so well for Trump's re-election. So the dollar is on the back foot, and what could have been seen as just a correction could easily turn into more of a trend. Yesterday the dollar index fell below 95. In the Eurozone, meanwhile, for now anyway, markets are going along with the celebrations, looking forward to that first common bond to be issued by the EU. They're likely to be gobbled up when they're released, but how they'll navigate the default risk remains to be seen. That's a can that will be kicked down the road for the time being. For now though, the euro rallied across the board yesterday. Euro dollar reached 116, incredible, and sterling euro broke below 110 before a slight recovery brought both of those pairs back from those extremes. It's like the EU has arrived very late to the COVID recovery party, but it does look like they've come with a bit of euro strength. Who'd have thought, hey? You can't make this stuff up. Right, well that's it from me. Have a wonderful day and please join me again tomorrow. All the best.
If you do not have a clue, then just tweet through and ask FX Blue.